Hey, what's up guys? Welcome back to the channel. In today's video, I have an important lesson to talk about, and that is about sticking to your strategies and also just really taking profits. Last week, about 2 days ago, I had the opportunity to profit around $4,000, but only ended up taking home about $500 with that trade. So if you guys remember last week, I was talking about investing into WanChain, and that's exactly what I did. I did draw my trend lines. And I was very successful in having a solid entry point, okay? So let me first just draw these little trend lines. So coincidentally, after I had made the video, I did set an entry point close to around that the 43 cent range, right around this area. It was overnight or so. And I was able to get, if I remember, about 60,000 coins of WanChain right around that area. And following it was actually this nice breakout out of the wedge. And I knew right away that WanChain would be met with a lot of resistance at that area, simply because it was met with its previous highs. And of course, you know, anytime we have previous highs, there has to be some consolidation going on. And of course, that's what ended up happening. We were seeing a little bit of this downwards wedging right here. And this is why I always talk about how having a solid entry will always make the difference in the world. And this is exactly what happened here, you know, because I was still within this nice bottom of the wedge, at least close to. I was able to securely, you know, set a nice stop loss where I wasn't scared if this thing were to dump. I'd lose out on it, because following it was this huge breakout from that area. Okay. And so after WanChain ended up breaking out, I honestly assumed that it would just be followed by a nice little uptrend. In fact, you can see I have some charts right here that I did post within my group. You know, what I was honestly expecting for WanChain to do. I really did see WanChain having an upside of around 20–30% from the entry. Of course, that was not the case. What was met with WanChain afterwards was this huge resistance that if I would have been a little bit more cautious about, most likely I probably could have took some profits earlier. This to me right here was not unexpected. I think that having some initial rejection here would have been okay, following another consolidation right here. But what was very unexpected was actually the second one that came about, and was this one right here. At first, you know, I did see this thing break out, and I was expecting for us to start making higher climbs, higher moves from that area. Of course, that was not the case. Afterwards, what followed was this huge drop in price action from that point. I believe it was like a 5% drop. Yeah, it was around 5%. If I would have trusted my instincts, if I would have saw that rejection, I honestly should have just taken profits at that point. Okay, but what I ended up doing was just hoping that maybe perhaps it could wedge out. And if you guys really draw that wedge, it doesn't make much sense, because we already did have a breakout right here, and we already did break out of the wedge. And so we were met with a triple top resistance. And if I simply would have looked at that for what it was instead of a bias, you know, I would have actually been able to, you know, take some much bigger profits than what I actually ended up doing. And because what was followed, of course, was this drop in price action. So instead of taking about $4,000 in profit around this area, or hell, even around $2,500 or close to $3,000 in profit around here, what ended up happening was that after the drop, the profit that I ended up taking was only about $500, because you can see that, you know, my upside at this point was only around 6% maybe or so, like, you know, as opposed to that 21%. You know, so it was a little bit of a disappointment. Even though I did walk out with some profits, I would argue that opportunity cost is also loss, because over time, if you don't learn to take profits and stick to your strategies, it can eat up into your portfolio, and you know, you're not able to be as consistent and as profitable simply because you're doubting yourself every move of the way. And also, I think greed plays a big part into this as well. You know, I really thought that after this 20% upside, it would still be met with another 30%, 40%. So again, that's greed on my part, and I really thought that my bias, I didn't realize that my bias was getting in the way of that. So I did end up cutting some, taking profits here instead of $500, and as you can see, it just started dragging, drooping down from that point on. Regardless, though, I didn't make out with about $500 in profit, but my opportunity here, my opportunity cost was around $4,000 that I could have been met with. So this is something I really want to talk about. It's very simple, very to the point, is that again, anytime you draw those support structures, anytime you have, say, a certain method, I don't know what it is for you guys, for each individual. Some people use Elliott waves. I personally do. I just stick with wedges and volumes and patterns and such like that. But if you're going to use that, to stick with it, okay? Always learn to stick with those patterns and to never doubt yourself, okay? When you have a certain feeling, it's probably probably for the best, all right? Even if you end up missing out on upside moves, it never hurts to take profits, because what ends up hurting worse is when the market ends up going down, okay? To me, that hurts worse than when it ends up going up. So at least that's just how I feel about that. So anyways, hope you guys enjoyed this video. Very quick, very to the point. If you guys enjoy these kind of videos, please let me know. I'll probably end up doing some more. And also leave your comments below, and I'll get to you guys as soon as possible. So with that being said, hope you guys enjoy this video, and I'll see you guys on the next one.